Hey there, folks! Welcome to a brand new episode where we dive deep into the most intriguing topics of our time. John Oliver here, ready to dive into a topic that's got everyone talking: the future of money. It's a subject that's not just for the financial experts or tech geeks anymore. It's something that affects each and every one of us. And no, I'm not talking about those collectible coins your weird uncle keeps trying to sell on eBay. You know, the ones he swears will be worth a fortune someday but are currently just gathering dust. I'm talking about the digital revolution that's shaking up the very foundations of how we spend, save, and think about dough. This isn't just a minor tweak to our wallets, it's a seismic shift in the financial landscape. Remember the days of carrying around a wad of cash? The feel of crisp bills in your hand, the jingle of coins in your pocket? Yeah, those days might be numbered. As technology advances, the way we handle money is evolving at a breakneck pace. We're living in a world where your phone is quickly becoming your wallet, where a simple tap or swipe can complete a transaction in seconds. Imagine being able to send money across borders faster than you can say international wire transfer fee. No more waiting days for transactions to clear or paying exorbitant fees. And it's not just the younger generation that's catching on. Even your grandma is asking about Bitcoin, trying to understand what all the fuss is about. Now I know what you're thinking. John, this all sounds about as clear as a politician's tax returns. And you're not wrong. The world of digital finance can be incredibly confusing. The world of digital currencies, cryptocurrencies, and blockchain technology can feel like a labyrinth designed by a bunch of tech bros who speak in algorithms. It's a complex web of terms and concepts that can make your head spin. But fear not, dear viewers. We're here to guide you through this maze. Over the next few sections, we're going to break down this brave new world of money, making it accessible and understandable for everyone. We'll explore the potential benefits and pitfalls, giving you a balanced view of what this digital revolution means for you. And hopefully by the end of it, you'll feel a little less like you need to call your nephew who works in tech every time you hear the word crypto. Because let's face it, we've all been there. Buckle up, because things are about to get interesting. We're on the cusp of a financial revolution, and it's going to be a wild ride. So stay tuned, and let's navigate this new world of money together. From digital wallets to cryptocurrencies, from blockchain to decentralized finance, we'll cover it all. We'll look at how these technologies are being adopted globally and what that means for the future of traditional banking. We'll also delve into the practical aspects of using digital currencies in everyday life. How do you set up a digital wallet? What are the security concerns? And how can you make sure you're not falling for scams? And let's not forget the regulatory landscape. Governments around the world are grappling with how to regulate this new form of money. We'll explore the different approaches and what they mean for consumers and businesses alike. Whether you're an investor looking to get in on the action, or just someone curious about the future of money, this series will have something for you. So sit back, relax, and get ready to become a part of the money revolution. Thanks for joining us today. Stay tuned for more episodes where we continue to explore the fascinating world of digital finance. Until next time, keep questioning, keep learning, and keep evolving. Alright, let's start with the basics. What exactly do we mean when we talk about digital money? Well, in a nutshell, it's any form of currency that exists primarily in the digital realm, represented by ones and zeros instead of paper and ink. Think about it. You probably already use digital money all the time without even realizing it. Every time you swipe your debit card, pay for something online, or even transfer money through your bank's app, you're engaging with the digital avatars of your hard-earned cash. But here's where things get a little more complex. Digital currencies, as we know them today, come in a few different flavors. There are your good old-fashioned central bank digital currencies, CBDCs, basically digital versions of existing government-backed currencies like the US dollar or the euro. Think of it like this: instead of the government printing physical money, they're issuing digital tokens that represent the same value. Then you've got your more rebellious cousin cryptocurrencies. These bad boys operate independently of any government or central authority, relying instead on a decentralized network of computers to verify and record transactions. It's like the Wild West of finance out there, with all the excitement and potential for chaos that implies. Let's dive a bit deeper into how these digital currencies actually work. At the heart of many digital currencies, especially cryptocurrencies, is a technology called blockchain. Imagine a digital ledger that is duplicated across a vast network of computers. Each transaction is recorded in a block, and these blocks are linked together in a chain. This decentralized system ensures that no single entity has control, making it incredibly secure and transparent. Miners, who are participants in the network, use powerful computers to solve complex mathematical problems that validate transactions. Once a transaction is verified, it's added to the blockchain, and the miner is rewarded with a small amount of cryptocurrency. This process not only secures the network but also introduces new units of currency into circulation. Now let's talk about digital wallets. These are software applications that allow you to store, send, and receive digital currency. They come in various forms, from mobile apps to hardware devices, each offering different levels of security and convenience. Some wallets are designed for everyday transactions, while others are meant for long-term storage, offering enhanced security features. Hot wallets are connected to the internet and are more convenient for frequent transactions, but they are also more vulnerable to hacking. Cold wallets, on the other hand, are offline and provide a higher level of security, making them ideal for storing large amounts of digital currency. As digital currencies continue to evolve, they are becoming an integral part of our financial ecosystem. From everyday transactions to international trade, digital money is reshaping the way we think about and interact with our finances. And as more people and businesses adopt these technologies, the line between traditional and digital finance continues to blur. The future of money is digital, and it's already here. So whether you're a seasoned investor or just curious about the world of digital currencies, it's an exciting time to be involved. Stay tuned as we explore more about this fascinating topic in the upcoming chapters. Now, no conversation about digital currencies would be complete without mentioning the OG cryptocurrency itself, Bitcoin. This digital currency has become synonymous with the very idea of cryptocurrency, often being the first thing that comes to mind when people think about digital money. This digital maverick burst onto the scene back in 2009, shrouded in mystery and whispered about in online forums like some kind of forbidden fruit. Created by the enigmatic Satoshi Nakamoto, Bitcoin was initially a curiosity, a novel idea that only a few tech enthusiasts and cryptography experts paid attention to. Back then, you could mine Bitcoin on your grandma's laptop, and a single coin would set you back less than a cup of coffee. Imagine that. People were literally mining Bitcoin in their basements using nothing more than a basic computer setup. It was a time when the concept of digital gold was just beginning to take shape. Fast forward to today, and Bitcoin has been on a roller coaster ride of epic proportions, soaring to dizzying heights of value one minute and plummeting back down to earth the next. Its value has seen astronomical rises, making early adopters millionaires overnight only to crash and burn, leaving many to question its stability and long-term viability. So, what's the deal with Bitcoin? Why does it evoke such strong reactions from both its supporters and detractors? Is it a revolutionary financial instrument or just a speculative bubble waiting to burst? Well, its supporters will tell you it's the future of finance, a decentralized currency free from the whims of governments and banks. They argue that Bitcoin represents financial freedom, a way to take control of one's own money without relying on traditional financial institutions. The underlying technology, blockchain, is hailed as a groundbreaking innovation that could transform various industries beyond just finance. Its detractors, on the other hand, will point to its volatility, its potential for illicit use, and its environmental impact, more on that later, as reasons to be wary. They argue that Bitcoin's wild price swings make it an unreliable store of value, and that its anonymity can facilitate illegal activities. Moreover, the energy consumption of Bitcoin mining has raised significant environmental concerns, with critics highlighting the carbon footprint of large-scale mining operations. The truth, as always, probably lies somewhere in the middle. Bitcoin is neither a perfect solution nor a complete disaster. It has its strengths and weaknesses, and its future will likely depend on how these are addressed. As with any emerging technology, there are growing pains and challenges to overcome. Bitcoin is a fascinating experiment, a glimpse into a future where money might look very different than it does today. It challenges our traditional notions of currency and forces us to rethink the way we handle and perceive money. Whether it will become a mainstream financial tool or remain a niche asset is still up for debate. Whether it will ultimately succeed in upending the global financial system or fade into obscurity like a forgotten boy band remains to be seen. One thing is certain though, Bitcoin has already made its mark on the world, sparking conversations and debates that will continue for years to come. its legacy, regardless of its future, is already cemented in the annals of financial history. Okay folks, time for a quick tech talk. We can't really wrap our heads around cryptocurrencies without understanding the magic behind the curtain blockchain technology. Now I know what you're thinking. John, please, no more tech jargon. My brain is already fried from trying to set the clock on my microwave. But trust me on this one, it's worth it. The blockchain is actually pretty cool once you get past the intimidating name. Imagine a giant digital ledger that keeps track of every single Bitcoin transaction ever made. This ledger isn't stored in one central location though. Instead, it's copied and distributed across a vast network of computers all over the world. This decentralized structure is what makes the blockchain so secure. To tamper with a transaction, you wouldn't just have to hack into one computer, you'd have to hack into every single computer on the network simultaneously. Good luck with that. Think of it like this. Trying to cheat the blockchain is like trying to convince every single person on Earth to agree that pineapple belongs on pizza. It's technically possible, but highly improbable, almost impossible. And that, my friends, is the beauty of the blockchain.